The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 5th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes. And I believe we should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Internationally, 727-445-1044. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, a little bit under the weather. Of course, that is an understatement, but I am here, so welcome to the show. Right now, we've got the Dow trading up about 55 points, trading out at 19.225. S&P is up 13 at 2205. NASDAQ Composite up 53 points. He's trading at 5308. Russell 2000 up 20 points. That's a big move. That's trading out at 1334. Gold is flat right now, trading 1177. Silver's up 7 pennies. Light sweet crude up 26 cents. Leading the charge here, dollar-wise to the upside, you've got Priceline up 23 bucks. Amazon up 20. Google's up 11. To the downside, Humana Inc. down $7, about 3.5%. Agios Pharmaceuticals off about 13%, $7 and change. Aetna down 3.5%, or about $4. So I literally just really pulled myself out of bed. So I'm just going to be looking at these charts fresh, just like you. So let's start with, I don't know, we're going to start here with the NQ. It's where I start. Normally, take a look at what's going on a short-term basis with inside the NASDAQ out here. Now, one of the things that we can see when we take a look at this chart, let me get rid of those counts to the downside. Those are not correct. But we can see here, if you're watching us on TigerTV, I hope that you are. If you're not, let me describe what happened. You probably already know this. We saw a gap down last night when the equity futures contracts began trading 6 p.m. Eastern Standard Time. That gap down lasted for about 30 minutes, and then from there forward, we've seen these markets move higher. Now, when they moved higher into the time period here this morning of about 11 o'clock, they began, actually it was about 10:30, they, meaning the NQ, the 30-minute chart is really what I should say, began moving higher, doing it with less relative energy. That alone is not a signal. It is a warning, okay? It is a warning. Got that same warning signal out here at 11:06, and then you got the signal when the bears showed up. And they showed up. We know they showed up because they gave us a nice little bearish reversal signal. There was a bearish engulfing. Price is then going to move down to a support level. Your first support level is always going to be that oscillator on change line. That's Stevie's red line. Right now, we've got price trading right on it. Price then went to the next level support. As it broke through that, went right to its TAS market profile, the bottom of that box out there. You'd have to say that point of control pretty much equidistant between the bottom and the top. So this box doesn't tell us whether it is buyers or sellers that are in control out here. But we do know that price found support at 47.68 and change out there. That is a key support level to be watching today, just like at the highs out here as it was making that fifth leg. Price is moving higher into that 11 o'clock time frame. 49.75 is going to be a key level of resistance. Now, that's the 30-minute chart. Let's just go ahead and stick with the NQ here. We'll go switch over to the others out here. Let's take a look at the 120-minute chart, because you're going to get a different message or massage. I could use a massage right now, but you're going to get a different message from different time frame charts. If we take a look at the 2-hour charts here, It's saying as price was moving lower yesterday, last night, it was moving lower with less relative energy. And then during the next 2 hours, so from 6 to 8, moves lower, kind of finishes where it opened in essence. So at 8 o'clock was trading about where it opened at 6 o'clock. But then the next 2 hours, we saw a nice little bullish reversal signal out there. Price came back and tested that oscillator and change line very early in the morning in the 4 o'clock time frame, just bounced off of that like a trampoline. As we take a look at this 2-hour chart, the only thing that is somewhat bearish out here is the fact that during the 2 hours that took us from a 10 to 12 out here, you did get a nice little shooting star candle. Now, it was really coming where we don't really have a completion of a pattern. I don't even have an A to B equals CD. I mean, I can show you which one would be out here that we would be looking at, but that's not a completion out here. 48.17 would have been the target. Got to 47.98. That's probably, a bit too far away to call this a completed A to B equals CD to the upside out here. So we really don't have, on a 2-hour basis, what I would call a significant level of a reversal. If price did fall below that TAS market profile low, we would then target the next price level to be 47.40. That would be that oscillator unchanged line on the 2-hour chart. Let's take a look at what the 5-hour energy drink chart is like. I could use some of that, although I don't think I'd actually stomach a 5-hour energy drink. Not that I've had one, but it just doesn't sound good to me. And we take a look at the 5-hour chart, not a whole lot out here to give us a signal other than a bullish signal. Price above the oscillator and change line, price above its TAS market profile high out here. So the 47.55-ish area is a key level of support. If I look at, remember, whatever time frame it is that you're trading on, be aware of what's going on up top, down below. But with regard to your trading, stay inside that, identify those levels of support, resistance, and so on, and manage your trade accordingly. On the daily chart out here, quite frankly, the NQ is still in what we'll call a I won't say bearish, but in a mode where sellers are the ones in control. Now, the reason I won't say bearish is because you're watching on TigerTV, that very bottom panel is that price oscillator. It is falling. We know that it's falling because price is below Stevie's red line out here. So just in a heartbeat, you and I know whether the price oscillator is falling or rising. It's falling. However, the price oscillator itself is still above zero. So falling and getting back to zero could be a trampoline effect, could be more of a just really a retracement message that's underway out here. If, in fact, we see it get below zero and it's falling, that's a whole different scenario out there, but we don't have that as we take a look at the NQ. So let's go hop in the driver's seat here, do the same kind of a thing with regard to the ES, although we only have a minute, so we'll be quick. We can see the same type of price, relative strength divergent pattern inside of the ES, price coming back, testing that TAS daily profile of 2203. This box here is in control of the bulls, meaning that point of control lower to the bottom of the box. So if, in fact, the ES can muster up the strength, get above 2205, 2208 should become its target out there. Below 2203, then its move continued lower is what the 30-minute chart is signaling to you and I. Let's finish off this segment here by taking a look at the 2-hour chart. And the 2-hour chart doesn't show me anything that looks bearish. As bad, as horrible as that last sentence was with regard to grammar, you probably got the picture out there. On the 5-hour energy drink chart here, this too is, we'll call it bullish to neutral because price is trading right at its TAS profile on the 5-hour time frame. This is Steve Rhodes with TFNN. Dow's up 52, S&P's up 13. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got some questions that have come in. Let's go to the first set from Tom, asking about, says, can you give us your expert opinion on Nugget and JNUG? I'll give you an opinion. I'm not sure how much of an expert it'll be, but let's go ahead. And Tom, it looks like, I don't know which side of the trade you're trying to take on this. NUGT, I'm assuming you're talking about going long. That would make sense because you would be looking at the ETF, the short ETF, if you were looking at something different. So let's do this a couple of different ways. Always good to understand, what's the market communicating to us on the underlying instrument here, or instruments. It's slightly different. We know that the price of gold and silver impact us. And so we want to go ahead and take a look at that. Now, I think that expert-wise, I've been very consistent with each of you out there with regard to showing you the influence that the Japanese yen futures have, really both on gold as well as the Treasury bond. So we know that is – now, those correlations can always disappear. But at this stage here, all of our evidence supports the fact that it hasn't disappeared, and so therefore we pay attention to it. Now, last night when the Japanese yen opened, just as when the I'll tell you what, let's do this, because we've got a caller on the line that wants to look at gold, so let's go ahead and combine all of this at the same time. So let's go out to Denver, Colorado, and speak with Ron. Ron, thanks for calling. How are you doing this morning?
Hi, Steve. I hope you're feeling better at the end of the day.
Me too.
Anyway, I just wondered, gold's made a nice recovery this morning, and I just wondered what your thoughts were. And I will admit, this morning, Tom O'Brien, somebody called in and asked him about NUGT, and he looked at it and says, I'd buy it here. So I bought calls on it this morning, and gold's recovered nicely, and it's a good uptrend. I just wondered, would you kind of maintain that, or what's your thoughts?
Well, yeah, I will tell you that last night's open, the futures opened lower, but gold opened higher. The Japanese yen also opened higher. I'm assuming it had something to do with the Italy, vote that was going on. And on Tiger, I'm assuming that it was. It doesn't really matter what really drove it. What I was watching for was whether or not price could actually go ahead and hold this little red line, that oscillator and change line that I referred to, that has been really resistance out here. Now, right now, with regard to the Japanese yen specifically, it's trading like right on it. So trading just slightly higher will go a long way to influencing the upward direction in the trade that you are in. So the good news is that it had traded much lower. In fact, it opened last night, and then it continued to trade lower throughout the day and early morning, and since then has made a nice big comeback. So I don't know I wasn't listening to any shows today, so I don't know if Tom was just looking at just the NUGT and volume and so forth, or what. But I can tell you that doesn't really matter. What I can say is that trade, that long trade, makes a whole lot of what do I say? It will become a lot more supported when we can start to see the Japanese yen on a daily chart close above that oscillator and change line. Gold is still trading just slightly below it as well. That's the bottom portion of my screen. I mean, it's almost like really right on it. So the answer to your question is those trades actually look pretty good to me.
So I'm a moron on this Japanese yen. Why is there a relationship? Is it, if the yen goes up, the gold would go do what, and why?
So first, it depends on how you're looking at with regard to the currency. So because I have no time delay when I take a look at yen futures, that's what I'm showing. In the case of yen futures, as they're moving lower, that means that the currency is getting weaker. If it's moving higher, it means that it is getting stronger. That is the correlation with regard to answering your question with regard to directionally how do they apply to each other. Why? Okay. I don't know. Okay. I'm not even going to really venture to give you, because we don't really need to know why. We just need to know that this is really how it reacts. And we can look at, there's a couple times during the show or during some of the shows where I have some 10-minute charts up, and we can actually go see candle by candle directionally just how well correlated it is. And it's correlations can come undone. At this stage of the game, this one hasn't. And at this stage, in answering your question, this looks very promising, because it has fought its way back after last night's open. Now, if we just take a look at the GDX as an example, which is what you bought some calls on, what is nice about this is while gold has struggled, while the yen has continued to weaken, the GDX, the miners themselves, have said, I'm not going to go ahead and play in that game. I'm going higher or sideways, really, and I don't care what the two of you guys are doing. I'm willing to just camp out right here, and that's what it has been doing since the trading session of November 14th. It basically has traded sideways. What is bullish about this chart that we're looking at? It's come down to a level of support that is held. It's been tested. It has failed a couple of times during the last couple of weeks here, but the biggest failure, was down on November 23rd. That had about 134 million shares. That was going against 135, so that was okay. And then a couple of days ago, it was only 58 million shares pushing lower. That tells us that there aren't any more sellers inside the GDX, or there certainly weren't more sellers as of December 1st out here. Now, today's volume, 42 million shares. Not that big of a deal, because that's in essence going into 97 million shares. It doesn't mean that your trade is wrong. What this means to me is that the miners themselves have camped out here and said, I'm not going lower. Going sideways is fine. If we see the yen continue to strengthen out here, then I believe that is going to bode well for your trade in GDX, gold, silver, all of those things out here. And so that's what you'd be looking for in order, so I don't know what calls you bought and how much time you got, but in essence, that's what I'm seeing at the moment. Does that help you?
What is the symbol for yen?
Well, the easiest, if you got the futures contract, is going to be 6J. And then you can either use the current month that is trading, or you can go to typically #F, which will be the continuous contract, which you'll get all of the historical data where you can take a look at it. So if you put that on a chart, and you can put multiple symbols, or you can put things side by side, you can then go take a look at gold, the futures contract, and you will see the direct correlation. In fact, put them on a short-term chart, and it'll kind of just blow your mind. And I don't know the answer why. It'd be nice, I suppose, to know the answer why. But I don't really know how electricity works, but I use it all the time anyway, so you know what I mean? I don't. I really. I know, but I know. What I know about electricity is if you see wet ground, don't go hold something electric with bare feet. It's not going to turn out very good. So
Yeah.
I hope.
No matter
Ron,
what,
I hope,
no matter what the charts say. Huh? Okay.
Yeah, exactly.
Thank you very much.
Yeah, you
Thank
bet,
you, sir.
you bet. All right, thanks for calling. That was Ron in Denver. And Tom, so I hope that helps you out, Tom, as well. And so just to reiterate, it looks pretty good. Now, if we take a look at some of the higher weighted, stocks, this is a kind of a throat thing right there. I think Barrick Gold might be the highest weighting equity inside of the GDX out here. It right now is running into an area of resistance, which is going to be 1595 to 1616. Clearing that, getting above that, Ron, Tom, everybody else that's trading the GDX would be very positive just because of its weighting structure. You would have to have price above, a level of resistance. So watch that 1616 area. In the case of Barrick Gold, closes above that. Today's volume so far about 12 million shares going into 16 million shares. Ain't not too shabby. Going into 36 million shares, that is a little bit shabby, but all looks pretty good for you guys. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The other thing that we should mention with regard to the gold trade out here, and perhaps some of the reason why we've seen the miners really move sideways, where the yen had been getting the yen had been getting weaker out there, and is the U.S. dollar index. And you and I have taken a look at this over the past 4 or 5 trading sessions, and what we have noticed is that red line that I use, that oscillator and change line, which is an excellent tool, and subscribers have access to this. I've done workshops. I've provided them with the actual formula for those that use the Thinkorswim application so that they can go ahead and have it on their charts out there. We've noticed how, in this case here, it's really active. It can either connect as a support or a repellent zone out here, and we can see how price has just simply tried and tried and tried again to get back over it. In other words, to try to turn that price oscillator up, and it has failed. We see a nice little wide-ranging bar as we speak right now in the U.S. dollar index. I can tell you that commercial traders, the smart money, presumably smart money, I don't know what else you call it, but even in the face of higher interest rates and everything else, they've been building up to high net short interest positions, net short interest as it relates to their open interest out here. So, it's why you and I, we go mining for data. It's why we take a look at charts. We believe that technical analysis and charting is the most fundamental aspect of fundamental analysis, because we want to know what our buyers and sellers doing out there. We can give a hoot. I don't even giving a hoot really means about what is the PR message that's out there. It's really what are traders doing, where is price likely to head to, and that's how at least it assists us with regard to our thinking as to what the market wants to do. So that's a positive. Now, of course, we know that currency-wise, you've got the euro, the Canadian dollar, meaning the loonie, you've got the Great British pound, you've got the yen, you've got the Swiss franc, you've got the Swedish krona, that all make up the index, the U.S. dollar index out here, as one of our Tigers had posted in their big buying inside of the euro. If we just take a look at the euro futures out here, no question about it. Big move, big wide-ranging bar. These market profiles here are accurate and active, and you can see the price today on its move higher ran really right up into the top of that daily market profile, which is 107.94. Again, it's the futures contract that we're looking at for the euro. Markets don't end on wide-ranging bars. So this says as long as the euro is going to finish up towards this level here, the price of the euro is going to go test that weekly profile at 1.083. And if it takes that out, it's got clean sailing. Well, then what you resort back to is, hey, where are we in relationship to our retracement levels, from this case here, from high to low? So this says you clear the 108.32. That offers the promise of 1.108. That's your 0.618 retracement level. And if it's coming into that with volume where it closes inside that area, then you're inside that swing point from November 9th out here. And then it says game could be on to test the high of that level, which is at your $1.13 area. So that would then say for Tom, for Ron, for anybody else that's taking a look at gold, if you get the combination of the Japanese yen itself strengthening, okay, which is going to have an impact on the U.S. dollar weakening, not as big of an aspect as the euro will, but if you get that combination where you've got also the U.S. dollar index itself weakening out here, then that's just a double, a hit it out of the park type of scenario that you want with regard to those mining trades out there. So, worth pointing out, worth mentioning when really trying to fully answer the question, hey, what do you think about the miners out there? And now you know what Stevie thinks. Now, let's go take a look at some other stuff that's working in the marketplace, working either to the upside or the downside, while I switch over to a different set of charting tools out here. What do we want to look at next? Let's just go cover, as long as we're in the commodity area. Let's go take a look at light sweet crude. Light sweet crude basically sitting right here at resistance. This may be the extent of its move out here. So those of you that are long, black gold, Texas tea, just make sure that you've got to stop, because you've hit a couple of different levels of resistance out here. Now, get in about $52, you're on the way to $59 out here. But until that happens, what we know is that you are at a significant level of resistance. This doesn't tell us whether it's going to take it out or not. We don't have a wide-ranging bar coming into it. I don't really have a volume coordinate that is worth a hill of beans to be able to tell you. But we got 100% move. So everything says sideways to pull back inside of light sweet crude. Now, that's going to be interesting, because with the U.S. dollar index weakening, as we had seen that it has been doing, that should be a real plus with regard to light sweet crude. So but it had a lot of pluses here for rumors. So maybe the U.S. dollar index just really catching up to the price movement that we've seen inside of light sweet crude. Okay, let's go take a look at some other aspects of the market. What do we want to look at out here? Let's go figure out. This is pretty amazing. Never amazes me, but probably amazes you because you think, how does that work? We're going to get another. You're going to get a question, another one where I'm not going to be able to answer how that works. I'd like to tell you how this works. I just know that it does work out here. And that's Stevie's red line, which is a horizontal line on this chart out here. And the figure is 2208. You tell me how this works. That becomes a very key level of support or resistance. That happens to be at the exact point in time. Well, in this case here, because it occurred over the weekend, we don't know if it was really the exact point in time. But the way that I do it, it shows basically the exact point in time when the moon, in this case here, was furthest away from Earth. And that it acts as a support or resistance level. And in fact, it tells you which side of the trade you ought to be on, at least from a short-term trading perspective. And price made it all the way up to 2208. It got a little bit higher than 2208, but you and I know that the body of the candle is truly the essence of price, not the extreme emotion being the wick of the candle session out here. And it just simply acted as a resistance zone. So be very bullish to get above 2208, but that's not the case out here. This says, hey, this goes along with the 30-minute chart out here that says I still want to pull back when we take a look at the ES Mini. After forming that price relative strength divergent pattern, after forming that bearish engulfing, after trying to now test and reject that oscillator and change line on the 30-minute chart out here. So, all it needs to do is really close below this 2203 level and says it wants to go down to the next level. Now, there's no real A to B equals CD pattern out here that I can give to you. So instead, what you've got to do is you got to take a look at retracement levels. And the way you take a look at retracement levels here, I just simply go from the bottom last night that came in between 6 and 6:30. And I'd go from that low to the high that has come in so far today at 2208.75. And so that next level of where price ought to head to is 2197. You're at 2202 right now, so that's not really much of a move out here, but it looks like that is where price wants to head to, 2197. Below that, you're looking at 2190 area. That seems more logical, the 0.6 rate retracement of this move from last night to earlier this morning. What else do we want to take a look at out here? We want to take a look at how my head doesn't continue to just throb and feel like it's going to explode. And that's why you don't have the we don't have the camera on, because if my head exploded, it would actually not look probably very pretty on camera here. And anyways, that's that deal out here. With regard to the VIX index, where's the VIX index headed to? The low may be in, which says that the high may be inside the S&P 500 because it got down to test the level that it should have tested, which was 1234, the actual low. So far today, 1233. You got to like how some of these indicators work basically all the time. There are problems in River City out here. There's a problem in the New York Stock Exchange, and there's a problem in the Dow, and the composite. Been basically pretty ambivalent out here. But the leaders out here are saying, not so fast. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 52, S&P is up 12, NASDAQ Composite up 49 points. So before we went to that breakout there, I said there are some troubles in River City. And those troubles really stemming right now from the Dow. So we've had the Dow has been the nice leader out here. 19,222 is what she is trading at right now. And whether we look at the Dow equity futures contract, I'll put that up on the screen first out here. We can see price has been moving higher, doing less relative energy. Now remember that alone is not it's a warning sign. That's all. So when I say there's troubles in River City, there's a warning sign out that says, be careful. Now, if the Dow equity futures, if there's a sell-off going into today's close, and I don't know whether there will or there won't be, what we know is that the NQ and the ES have given us signals. They're on the opposing side saying, I don't know that I really want to continue to trade higher out here, right? They've given us that pattern, no conviction behind the move out here. We don't have that same type of pattern in the Dow. Otherwise, I would have shown that for you. I can show you a seventh wave move. I think it's more likely a fourth, but in any event, that doesn't really matter. What we can say by going to the longer term charts, the daily, as we saw on Friday, price began moving higher, doing less relative energy. That same pattern is in existence today. We don't have a bearish reversal signal, but closing underneath Stevie's oscillator and change line, the red line, about 19,156, that would be problematic. That would be a confirming signal that, hey, you know what? I'm ready to take a rest out there. And considering the move that we've had higher, just a 0.382 retracement would, I just want to make sure that you have your seatbelts on, because that would look fairly ugly to most, maybe not to, but it will look fairly ugly to most out there. Now, that message is actually confirmed when I take a look at the advanced decline oscillator reading. That happens to be the very bottom panel of my screen out here. In fact, we'll just do this. We'll just turn off. So it's the only panel out there, just so I don't confuse anybody. Of course, that's asking a whole lot. That's not it. See, I confused myself out there. I turned off the wrong gosh darn thing. There we go. Now we got it. Now we're just looking at the bottom panel out here. So we can see this is the advanced decline oscillator reading. That means taking a look at the 30 issues with inside the Dow, advancing and declining each day. And it's measuring the difference between the 19 and 39-day exponential moving averages. That's the math behind this oscillator. We're taking a look at the difference between a faster and a slower moving average. And there's a reason that we use 19 and 39. They happen to be, for this tool, the best. In fact, for many tools, the best 2 periods that one can use. I say that not because I pulled them out of my you thought I was going to say something else. My textbooks, but instead the textbooks that were used by one of the guys in charge of the Jet Propulsion Laboratory out there, and he was a rocket scientist, I should say. So that's good enough for my line of work out here. So we can see that price here been moving higher, and we have a declining oscillator reading. Now, this can go on for a period of time, but it tells us about the underlying weakness, the lack of energy, just like we saw on the other chart that I had out there that says, okay, time to be careful. So when you put that together, I'm going to go ahead and put this back on just so I don't lose track of where I'm at in my thought process out here. But so you combine that with, okay, what do we want to combine that with? We want to combine that. Oh, just when we look here, let's do this here. Let's go take a look at the actual Dow. So I won't use the futures contract. I'll just actually use the Dow here. See, I can keep my mind focused even when it is pounding and just clogged. I was thinking of calling the Roto-Rooter for the brain, but then I've got to call somebody for the throat, which is even worse out there. And Halls and Sucrets are not getting the hall pass. They're not really doing the job out here. I did have had soup and tea and all that stuff, but even in here, hey, you don't want to hear about this. Look, when we take a look at the Dow Jones Industrials, this chart here, we've got a second, this is when I say we, you and I, the Dow itself on Friday formed its second TD9 setup. It's hard to do that. That can also be a sign of a market that's getting ready to turn. Now, you gapped up this morning inside the Dow. Gaps are your friends if you're a bull out here. Trading above Stevie's red line, 19,163. There's no reason there to worry on any kind of a pullback, but we're getting some signals out here that there could be problems. I would rather say you wait till you get the signal, and then you just simply fire away. Why? Because, a normal pullback, and I'm not even talking normal, but just moving back to 18,866 is really what one should prepare for if we get the confirmed signal out there. We do not have it, but we've got warning signs really all over the place. So it's going to be interesting to see how this market, when I say this market, the Dow Jones specifically, how it goes ahead and plays out. I saw somebody post something about the Russell 2000. No question that has been like a bat out of somewhere. And as we take a look at that bat out of somewhere, out of the Batman cave, the number to be watching here today going into the close of 1328.50. That is the red oscillator on change line there. Closing above it says you go back to the highs, closing below it, and then we know that is a real strong level of resistance out here in the market, saying it too wants to head lower. You might say where? I don't know. I'd have to go really do some retracement. I'm not going to do it on that chart. It's too hard with that set of tools out here. But just the number to be watching at first is going to be that 1328 level. And yes, we've got the New York Stock Exchange moving higher, doing less relative energy, just like we took a look at, not less, well, actually, I don't know if that's the case or not. I've got the New York Stock Exchange. Is this taking out its all-time high again? Oops, come on. Let me just go. I believe it has. I should just turn on my 52-week high out there. That would make it a whole lot easier, right? Then I don't even have to worry. So I'll just go over to that button and turn on 52-week high labels. There we go. No, it has, yeah. We have made a new 52-week high out here inside of the New York Stock Exchange. But we can see that it's doing it with a declining tops price oscillator. Still above zero, can resolve itself. You can get the type of momentum, the type of net advancing issues to resolve that problem. But right now, it is another issue. A lot of people like to call that, hey, a double top. We don't know if it's a double top. What we do know is testing a swing point high. Closing above that says, okay, I can go higher, volume or not, with regard to the New York Stock Exchange. So a slight problem out here inside the NYSE, confirming the slight problem that you've got inside of the Dow as we speak right now. And you've got the S&P 500, basically with the VIX index trading at a level where tops can form inside of the marketplace. So that's my take as we speak right now as of 1:49 in the afternoon. I don't see any other questions out here, so I'm just going to go tuck it in. Tuck me into bed, huh? No, we're gonna make our way through this. Let's go take a look at some individual equities out here And let's look at some things moving to the downside. How about that? Let's take a look at Humana. Volume today so far about 1.5 million shares out here. Get brand new market profile, which it has decided to take on in one single day. So closing below 206.15, you are at 205.89 right now. Not a good scene. Again, volume today about 1.5 million shares. Where's price going to pull back to? Well, we would resort back to about the 191.65 level. That is in Humana. Ticker symbol there, HUM. Humming along, but to the downside. If we take a look at the Biogen, BIIB, trading back $6, 2% to the downside. Volume in it today is about 996,000 shares, going against a breakout area with 2.1. So this is a pullback here with light volume. But, hold your horses. This could easily pull back to 277.50. Dow's up 47. S&P is up 12. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 47. S&P is up 11 out there. One of our denters would like to take a look at the steel stocks out here, specifically Schnitzer Industries. If ticker symbol there is SCHN. Now, as we take a look at the steel stocks, they've had one heck of a nice move, no question about it. Schnitzer happens to be trading into the nice breakout session from November 22nd, right just before Thanksgiving out here, 934,000 shares to the upside. Today you're at 207. So not necessarily a good deal out here. You are moving into a swing point with light volume. The question is it going to be able to just get over that by 1 point? That is $30.32. Because if it does, what you will see here is you'll see one pattern fail, but maybe not the other. See, in the case of Schnitzer, I like saying that, especially even though I feel like, Wiener Schnitzel or something like that. That was not even a good, that was not even, on a decent sense of humor, that wasn't even a good one. But if we take a look at the move out here on November 23rd, I guess that was really November 22nd out here. You can see prices moving higher, doing less relative energy, never a good sign. Bearish engulfing candle showed up a couple days later. You also had a TD combo 13 count there. You also have a 7th wave move. So what you want to watch is, so you take out a 7th wave move if you get 1 penny above that November 22nd level. But price may still be moving higher, doing less relative energy. So it just is a warning sign. In this case here, it's been more than a warning because of the bearish engulfing. So price is just coming back and testing a level of resistance out here. Now, in the case of, let's go take a look at the weekly chart out here, right? Let's go see what's going on the longer term basis. We can see that price is moving back to a level that has really been resistance out here. So here's a real kind of resistance zone. It's in the $32 area. The last swing point was December in 2013, had volume of about 1.1 million shares. Then last week it did 2 million shares. So you're moving up into that area with decent volume, or in the 32-ish type range. So if you can take out the high from a few days ago, November 22nd, would suggest that you're going to go up to the 32.66 area. So I hope that helps you out, peak. And I think that the other question was, which one was it? AKS. Let's look at this on the weekly basis, since that's the chart that we're on. That is AK Steel Holdings Corp. And this is moving into its most recent swing point on a weekly basis that takes you back to the time period of August 25th out here. 31 million shares. You've already done 18 million shares today. So you're moving into a swing point with volume. That says that the level of 1137 is going to be tested. And in the case of, not to suggest that these stocks kind of do the same thing out here, when that occurs, well, let's go take a look at it for sure. When that occurs, now, don't think this is updated with today's data, but let's go see what wave count AKS is in. And when it does that, it looks like we're probably going to end up getting into a 7th wave move to the upside. But again, price moving higher, doing less relative energy. Just be careful out here. If you are in at a good price, just be ready for some type of retracement where you can go ahead and add to that position out here. So that is the steel stocks as we take a look at it. So not really much else for us to take a look at in the next 20-second out here. So gold's trading back $3. May not be that big of a deal out here. What else is there to say? There's just, I will say this, and that is just simply that there are some, there's some warning signs out here. The buoys in the water say that we don't know if there's a tidal wave coming or not. But the buoys are rocking, and stay tuned because the rest of the day at TFNN, they'll be rolling. So stay tuned, folks. David White, he'll be up next, and then you got the Tom O'Brien Show from 3 to 5. So have a great Monday. I'll hope to see you on Terrific Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.